These are dangerous times for the oil market. But where there is danger, there are also opportunities. Overnight, the spot market for West Texas Intermediate crude fell to 1 cent a barrel. That's right, 1 cent a barrel. And the May delivery futures contract went down to minus $37. This is a historical moment. The world has never seen negative oil prices before. They are literally paying people to take their oil away because the storage facilities are full. And this has been triggered by the economic disaster caused by COVID-19. Think of all the planes that are not flying and all the cars that are staying at home. Oil industry guru Daniel Yergin is predicting a 20 million barrels per day decline in demand for the month of April. To put that in some context, this is 20% of the 100 million barrels per day in oil demand for 2019. Some others are predicting even worse. That is a 25 million barrels per day decline. The recent production cut of 10 million barrels per day by OPEC Plus has clearly not been enough to stop the financial bleeding. So what happens now? Producers have to shut down oil wells. What else can they do? They have nowhere to store the stuff. Note that US oil production started declining last month, and that will accelerate. There are few US shale producers who can survive US $20 a barrel, never mind 1 cent a barrel. The Dallas Federal Reserve recently estimated that the average break-even price of oil in the United States ranged from $48 to $54 per barrel in 2019. Now, the last time US oil production fell was November 2015 to May 2016. Note that crude oil prices then bottomed in February of 2016 and then rallied for 20 months, taking the price of crude oil from $26 a barrel to $76 a barrel. Importantly, the share prices of oil majors bottomed around the time when US production started shrinking in 2015. Think XOM or ExxonMobil. Its share price bottomed even before US production started to decline. Likewise, Chevron bottomed a few months before US production started shrinking. Royal Dutch Shell bottomed in January 2016. To be sure, there are dangers while oil is still overflowing storage tanks. But some oil majors' share prices are down 50, 60% from their previous cycle highs. And that's an interesting proposition from a contrarian perspective. As always, good luck in the markets and stay well.